Hi, this is Paul from globaltradingsoftware.com. This is a futures trading tutorial. I'm using ES on the 15 minute. This is a trading view platform. I'm using our range breakout indicator with our bias indicator down here as well, because this is a perfect example of what we call the straddle trade. So with the range breakout, we have four trades. We have the range breakout, which is within the bias. We have the straddle trade when we get a neutral bias, and we'll talk about that in a minute. We get data reversals and we get continuation trades. So in this situation on Friday, this was a perfect example of a straddle trade. So with a straddle trade, we only have targets in mind: 50, 60, 70, 80, 90, 100 ticks, or whatever it is. We only have targets in mind. We don't use the manager for the straddle trades. So when we get the open of the US stock exchange, we get the first 15 minutes and the range is defined here. It's colored in yellow, which means it's a neutral bias. We need confirmation of that with the 6 time frames on the bias depth heat map. More of them have to be yellow than any other color, because that's a neutral bias as well. It doesn't always happen, but when it does, this is a perfect setup. So we have on the current time frame, we have a green, and then we have 2 yellows, a red and a yellow. So that's as we go down the bias depth heat map, the time frame gets higher. So it's neutral, it's totally mixed. So what we do is we look for an entry above and below at that time. So as soon as that candle closes, we get a long order on. Long order first, because it looks like we've sort of moving back up again. And then we put a short order on just below the range as well, okay? Because this is why it's called a straddle trade. Long order goes in, use a stop limit order, stop market order, something like that. And then we have there. So this straddle only works when we've got the range is worked out by the software, and then it's given a bias as neutral. Yeah, and then we've got more neutral, the backup of that bias depth heat map. That's really, really important. And I'll put the links to both of these indicators for TradingView down in the link below, and then links for other platforms as well. So one of the things we also need to consider is the London Stock Exchange open range as well. So that's always going to cause resistance, and it did, as you can see there. So one of the things I always like to do is we put in that risk to reward here using the fib extension tool. And we're about 1 to 1.6, just tipping inside that. So that's really where we need to be. Got some decent fresh air, if you like. So I'm just going to take that off the chart again. Okay. So the next thing really is we've got the straddle. We've got a long, got a short order on. The long gets taken in, so our stop loss goes below the low of the sell order, gets cancelled. The stop loss goes in there for the long order, and really we're only trading into that range. And as soon as we get some resistance, as we can see here, I mean these candles are 15 minutes each. This one goes up to the high was around 87 ticks there. For me personally, once it goes through 50 ticks, and let's mark that on the chart. Once it goes through 50 ticks, which is here, put that in white, I move my stop to risk free. Okay, so we've gone through. We then can increment some sort of locking in profit, if you like. So for me, I'm going to go, next one we're going to look at really is when we go through 75 ticks, which is there. Okay, and put another white line in there. So when that candle's now gone through 75 ticks, I'm going to move my stop to 25 ticks, just there. Okay, at 3982.50. So that's my trading stop at that point here. Now, what we need to do then is understand the behavior that's going on here. So we move up, we're finding resistance in this London Stock Exchange Open range. So we need to decide whether we want to be more aggressive with our 50 ticks here and take the profit at this point. Allow the pullback. Say we're happy with 25 ticks. You know, that's a few $100. It's not bad. Allow it to pull back. Once it starts to move back up again, we can see it's having another push back through. Then we go, because behavior of the markets is such that once we get that breakout of that opening range, we have an impulse move. We have a pullback. It finds support. This is great support here, look, because we get this doji here really rejects those lows. So it then pushes up. Once we breach then this here, we get to our 100 ticks pretty quick. And I've always got a 100 tick sort of target on here. 100 ticks is around about there. So, you know, our 100 tick profit target is there just above the range. So then we can be really aggressive with our trailing stop. We can either take our profit or move the trailing stop just below the opening range of the London Stock Exchange. Then all we can do then is let it move up, and every 25 ticks we have the targets, we move our trailing stop. We have our targets, we have our trailing stop until such time it's taken out or we get into the close. This whole move from the opening range for the straddle trade was totals around 189 ticks. That was a great move. It does happen 2 or 3 times a week with this. This is just an example of one of the 4 strategies with the range breakout trading indicator from Xprat. We must have the confirmation from that buyer stepped heat map where all are yellow, remember, and then we've got a straddle. It's an each way trade. So we put a long, we put a short order on. When it takes the long, cancel the short, put the stop in, look for the targets. And if you're happy with 50 ticks, just take your profit. If you're happy once it gets into this London open and it can't push through, just take your 80, 90 ticks. It's fine. Don't be greedy. This happens every day. The stock market's open every day. We can define that range, and we've got 4 strategies to trade that range with this trading indicator. Hopefully that helps. Speak to you all really soon.